Well, for more on the sharing economy and its future outlook, I'm joined by Max Wolff live from New York. He's a strategist at 55 Capital and also teaches international economics and statistics at the Milano Graduate School program at the New School. Welcome, Max.
Thanks. Always great to join you. Thanks for having me.
Now, this whole peer-to-peer dynamic works better with some industries than others, for example, ride-hailing and home rentals. But what's preventing its expansion more deeply into consumers' lives?
Well, part of the issue here is that a lot of this tends to be what we like to call the service economy, but might also be called the servant economy. And most of the services, the on-demand services, whether they're lodging or having somebody else drive you around in the car or something like that, there's a real place for them, there's a value, but they also play a little bit on a social inequality, and they tend to exacerbate that. So we tend to see an awful lot of the consumption by the top 20–30% by income in the US, and maybe even a smaller sliver of the society when we see these utilities being exported to developing countries.
And that's interesting because we know that Uber is working on plans for self-driving vehicles, which could potentially put some of those workers out of work. So then what does that mean for its future as a ride-sharing company versus, say, just being another taxi company?
Well, I mean, the driverless car future might be fairly good for Uber as an operator, particularly because I think they're thinking of the ride experience as maybe a shopping experience, entertainment experience. They probably have a bunch of ways to make money on that experience. Where it's more perilous is, what does it mean to the drivers? Take the US, we have over 2.25 million Americans who make some or all of their living driving other people around. And if they were to be replaced by systems that were probably safer and would reduce car accidents, which would be beneficial, there'd also be a little bit of a question of what they do for a living and how they support themselves and their families.
Certainly a difficult balancing act. Now, when the sharing economy first started gaining traction, a lot of people thought it's the end of consumerism and people's need to own property. But how is the sharing economy transforming capitalism?
Yeah, so I do think part of what's happening is we're starting to see an economic system develop in the United States where the inequalities are fairly significant. And so the percentage of young people who can start a family and buy a home has been really on the fall for quite some time. We're seeing record-breaking lows again and again. Likewise, the car that was once a mainstay and well within quote-unquote middle-class reach has become more difficult. So if you want the car, maybe you need to spend a few hours working for Lyft or Uber or a ride-sharing company to make it up. And if you couldn't afford the car at all, then maybe you're going to use one of these car services. Again, also for unique reasons around the world, in the US particularly, the public transit system may not be comprehensive. Likewise, if you have difficulty affording your home or your apartment, it might make sense for you to do two things: rent out your place sometimes on Airbnb, and also seek a discount or a deal. Not that that's all that it's about, but seek a discount or a deal when you travel and go to an Airbnb. So necessity is also the mother of invention here, and the difficulties especially younger people are having in the US economically are part of this story just as much as innovation and success are too.
So given those factors, how sustainable do you think the economic models behind these companies, how sustainable is that?
Yeah, so look, the shrinking American middle class, the rising inequality in the U.S. distribution, unfortunately has been with us and accelerating for 30 or 40 years. So I don't know if it's sustainable. Looks like it is. I sort of hope that we have a little bit of a flatter distribution in the future because it looks like it's better for political stability and long-term economic growth, but it's not 100% clear how quickly or how likely we are to get there. The part that might be a little bit more open to question, which is an interesting debate, is how much will investors be willing to make huge bets on these companies, often hundreds of millions or billions of dollars rounds. And historically, these companies have often really struggled to break even or make a profit. They've been great at getting attention. They've been good at providing some services and some jobs. They haven't been good on making really wealthy the investors. And it's always a little bit of a question mark about how long the taste for an investment that's big but doesn't always return well, how long that sort of appetite lasts.
And that's interesting. So what do you think will ultimately stall the growth of the sharing economy or perhaps even replace it?
So ironically, I think the tech space is vital. It's part of the world's future. It's an area of outperformance for the United States and many other countries. It's important. But when you invest in a tech company, when you try a new technology, it's a bit of a jump into the future. It's saying, I believe in the future. I want to work to make the future better than the present and the past, or I believe it will be better. And when people's hopes for the future are rattled by political uncertainties or economic uncertainties or fears, then we tend to see a little bit of a weakening in these bonds. And the other thing is that our great sharing economy stories, whether they're Uber or Airbnb or others, are truly international. International investors, international engineering talent, and international growth. And if we don't see a maintenance of belief in free trade and international opportunity, these companies will be among the first and the most severe to suffer.
Well, they're certainly integrated into a lot of our lives. We'll have to see how that plays out. Thank you so much, Max Wolff from 55 Capital and the Milano Graduate School program at the New School.